Hey, and welcome everyone to the panel on the DeFi stack, on yield, aggregation of it, and the utility across chains. My name is Claude. I'm with Greenfield. We're one of the larger crypto venture funds out of Europe. We invest across infrastructure, consumer, and DeFi. And today I'm very excited to host a great panel of 4 people deep in the DeFi stack. And I want to kick it off and start with a round of introductions. Maybe Michael, you can start with your name, position, and what you're working on.
My name is Michael Ho. I'm a co-founder and chief business officer at D3. We are launching the DOMA protocol, which is turning domains into DeFi assets on chain. We've built a fully compliant Web 2 to Web 3 protocol to tokenize the internet's 360 million domain names on chain.
Hi everyone, my name is Anton Bukov. I'm co-founder of 1inch. We're doing aggregation and many other protocols. Thank you.
Hi everyone, my name is Shivam. I'm the founder of DZApp, and we are kind of aggregating all the DeFi protocols in a single place. And we are an intent solver. We solve all the DeFi intents in the DeFi ecosystem. So anything which is possible in DeFi is possible using DZApp. Thank you.
Hello everyone, I'm Fran. I'm the head of business development for Beefy. Beefy is a yield optimizer. We have more than 1,000 different investing strategies. And the special thing about Beefy is that you get paid in the same token that you deposited. So if you deposit USDT, you will get paid in USDT basically. And same thing happens for Wrap Bitcoin, Ethereum, and all of the tokens that we have.
Thank you so much. Very exciting. So each one of you kind of represents a different maybe layer in the DeFi stack. I would like to start with you, maybe Michael and Toma. Maybe you would say core infrastructure of the internet, right, of Web 2. Now transitioning that to Web 3 or to crypto. Maybe how would you describe how your protocol or project changes the way how people interact with DeFi or with crypto?
Sure. Essentially, domains have been traded on the internet as like real estate for over 30 years. But traditionally, buying and selling domain is associated with usage rights. What we're able to do is unbundle ownership rights and usage rights separately, tokenize them differently. And from that point of view, we're able to financialize these assets. And what we've seen is that more than half the market is very speculative. People just buy and trade these like stocks. So that's kind of what we're trying to break down. Build composability for these assets, allow them to be priced also in fungible tokens through things like launchpads and decentralized methods of price discovery.
Very, very interesting. Cool, thank you. And then Anton, I remember back in the day when 1inch launched, there was this FAT protocol thesis was what a lot of people were talking about. And what 1inch was building at the time was kind of controversial, or maybe thinking in a different way. So how would you now, after all these years, think about or summarize how 1inch has changed maybe the way how people trade and interact on chain?
Yeah, back in 2019, I remember there was an issue whenever you were trying to swap even like hundreds of bucks, even not thousands of bucks, you could get different exchange rate on different dexes. You could get like 3-5 more bucks if you would properly select DEX. So arbitrage at that time was possible, but it was like less mature than it is now. And we basically came up to a concept that if we would just split volume among multiple sources, we would have better price at every of them, and this would improve price for the end user. And yeah, nowadays we aggregate hundreds of protocols, and yeah, it's amazing because it's also allowed all those DEXs to coexist, because all DEXs were competing for user volumes as a trading interfaces, and it's super hard to attract users to trade on your website. And nowadays, most of the DEXs are getting volumes from aggregators. It's like fair volumes, fair in terms of their protocol formula, liquidity. So the better formula you have, the deeper liquidity you have, the more volumes you would get. And yeah, this also allowed hundreds of protocols to survive till nowadays. So yeah, and for users, it became obvious that they should use aggregators to have less slippage, less backruns. after you have a properly aggregated swap, there's no room for arbitrage after it. Because previously when you were swapping somewhere, arbitrage traders was getting most of the profits afterwards.
Yeah, I fully agree. I mean, I guess the user experience has changed and improved dramatically. Maybe DSAP, also curious from your perspective, building intents, maybe this is another kind of different approach, especially also to user experience. Maybe can you describe how you change how people interact with DeFi and the blockchain with your project?
Yeah. So I still remember like while we were working on intents back in the days, it's been like more than a year since we have started indexing all the blockchain protocols out there. And what we are doing is like we have indexed almost 200 plus DeFi protocols and 2 million plus pools, DeFi LP pools. And we have our Pathfinder, which finds the most optimized path, how you can move liquidity across chains, protocols, and tokens. And one major part of the UX is we believe like you cannot develop UI for all the user intents. Like there is certain limitations or there is a limit up to which you can develop a UI or design the UI or UX altogether. And that's where DZAP AI comes into the picture, where user can come and give any kind of intent, whatever user wants to execute in verbal or as well as textual format. User come and says like, I want to migrate my liquidity from Uniswap on Ethereum to Aerodrome on base chain. So let's say Uniswap is giving like 10% APR on ETH USDC pair, and Aerodrome is giving like 50% APR. But if a user has to do this manually, he would need to do around 12 to 15 transactions, including the approvals. And that's where DZAP comes into the picture and abstracts out all the complexities for the user. And user is able to execute the whole transaction in a single click altogether. So we have our abstraction layer of all the smart contracts in place. And for the end user, it's a single click thing. And the best part is like we have already aggregated all the DEX and bridge providers out there. So it's like you name it, we have it from 1inch to any other DEX provider, from bridge, from across to relay to anything. And the best part is like user gets the best output out there. So that's how we are solving the UX problem for the user.
Yeah, so basically, maybe to translate, you take a user intent, translate that to actual then call data on chain to fulfill the intent of the user. Cool.
Exactly. So user just gives the intent and we convert it into on-chain actions.
Cool. Then last but not least, Beefy as well. What is one of the things maybe in your journey that you saw how you have impacted on the ways how users can profit and interact with DeFi?
Cool. So like I said in the beginning, we provide auto-compounding strategies for different pools in different dexes, right? But we noticed that participating in these pools were not so easy, especially in the beginning, where most of the strategies were just UniV2 pools. That was quite straightforward because you only needed like 50% of each token, right? But with more and more complex AMMs arising, we realized that getting into these pools was not so easy. So we came up with, so also in the past, when people wanted to provide liquidity, they needed to leave our app, go to some exchange, make some trades, provide liquidity, and come back with the LP token to Beefy. So we developed a solution which we call the Beefy app, and how it works is that you can enter and exit any Beefy token with any Beefy vault, with any token, and we route all of the trades and we do all of the math that is needed in the background for the user. The user only needs to do just one transaction, and we calculate all of the things that are needed for the people to participate there. We have a 5 BPS fee on that feature. But honestly, when you enter 20 times or 10 times in a Beefy pool, you start to realize that 5 BPS, it's sometimes something like $5 or something like that. And it saves you a lot of time. Sometimes it's 5 minutes, 10 minutes. So people started using that feature more and more, right? So yeah.
Yeah, very cool. I guess both DZAP and also you, Beefy, you work kind of for the user, also improving the UX, right? Because before that, you need to go to 20 front ends, you need to change and do everything manually. But maybe what is one of the things that you still think can be improved if a user interacts with DeFi on the UX side today?
So I think that the biggest gap right now is cross-chain stuff. So how Bifi works right now is that we are deployed on more than 20 different blockchains, but all of these are like a different instance of the protocol, right? So we provide the SAPs, but you need to have the token in that chain. So the next piece that we need is to understand how we can provide a unified experience between all of these chains. And to be a bit optimistic, I think we are getting there. For example, we have seen how USDC launched the CCTP protocol, basically, where you can send USDC from Ethereum to all of the chains that USDC supported, right? So that is kind of solved for USDC, but it's not the case for most of the other tokens. So when we get there, I think we can provide a more like unified experience across all of the chains that we're on. I think we're getting there though.
DZAP, maybe what do you see is still open?
Yeah. So would like to reiterate few of the things. So like the name suggests DZAP, that is decentralized zapping. So just to add on the zapping feature of Beefy. So what we are doing is like irrespective of which chain, which protocol, which token user has assets on or liquidity on, they can move it across DeFi in a single click. So the thing is like, let's say user has funds on Uniswap. So they don't need to open multiple tabs or multiple protocols just to add or find the ratio itself, like he was talking about mathematical calculations, right? So we are also doing something similar. We have indexed Beefy, which was one of the most difficult one to index because Beefy is already like aggregating all of the yield aggregators out there. And like you can just move into Beefy in a single click across chains altogether. So we are solving it across DeFi itself.
Maybe, Michael, what I'm interested in if you think about maybe UX obstacles or design choices that you're going to make or you already have made with your protocol. Thinking from buying and holding domains in Web2, what are the big choices that you made?
Yeah, the biggest challenge for us is having to create infrastructure as well as front-end interfaces. Our goal is to transform ownership of domains from non-fungible assets to fungible in a way that can be traded just like on a DEX in the future. Domains are utility-bearing assets. They are yield-generating assets in some cases through things like domain parking, where you can put Google ads on your webpage and monetize SEO clicks. So we have done a lot of work traditionally building deep integrations with big registrars like GoDaddy, Namecheap, etc. But also building the DeFi native interfaces. We have two different audiences that we're catering to. One is a more traditional domain investor crowd onboarding supply, but on the demand side, it's really addressing folks that trade on things like Beefy or DZAP or using DEXs like DEX aggregators like 1inch as well. So you have to simplify that experience for a lot of folks that don't appreciate some of the value of these real-world assets, but we do think domains can be one of the first RWAs outside of stablecoins and kind of tokenized T-bills.
Would you think with the infrastructure that you're building, people will build maybe exchanges for domains on top of that? Or is this also a product that you're going to provide?
Yeah, the goal is to make domains a composable asset, right? So you can build anything on top of it. We're really just a tokenization engine. In many semblances, it's almost like a cross-chain messaging protocol. We just, tie ownership of a token to a DNS asset, which is fundamentally an off-chain asset. So we're more focused on compliance rules, KYC obligations for kind of the RWA asset that we operate in. But anything financial can be built on top of that. We are an EVM L2 using OPStack.
Okay, very cool. So it's everything comes together, and there are 3 DEXs on your protocol. 1inch can aggregate all the assets.
That's right.
These DEXs. Maybe for 1inch, what were some of the big learnings, or the historically you thought, hey, this design choice really made the user's life better? And maybe what are things that you still think, hey, we should get better at? Maybe as the entire space, not only 1inch, of course.
I think I should share the vision behind 1inch cross chain, because we approached this problem from different side than most cross chain aggregators and bridges and bridge aggregators. We came up from a vision that we are actually working on only self-custody products. And most of the bridging solutions, they are at the end of the day connected with the proof of stake, proof of authority, multi-sig of validators. They are incentivized or non-incentivized. And this is a risk which we don't want to introduce to our users. And we found there are like only few ways to build self-custody cross-chain thing. It's actually light client-based solutions, where light clients are smart contracts. For example, Rainbow Bridge in Near, that's how it works. I was actually one of the guys who was behind the architecture of this bridge. And another approach is atomic swap approach. So when users are always in charge of their funds until they reveal secret, which leads to claiming funds on destination chain and releasing funds on source chain. So we actually made our Fusion Plus implementation of atomic swap like architecture, and that's how we actually aggregated all other bridges under the hood, because 1inch resolvers who are competing for this auction, it's auction-based atomic swaps. So they actually compete, and they are free to use any other technologies under the hood. So yeah, their competition is always making better and improving prices and speed for the end users, but they are enjoying using any technologies under the hood, and they're like wrapping all the existing technologies into self-custody experience for our users. So it's like approach from different side, but yeah, that's the way is like most appropriate for us.
Very, very interesting. One of the things that I keep seeing and discussing also online and with tools like Privy, and just curious about your approach, right? How much of the entire protocol, the stack, are you building yourself in-house? And where do you make compromises and maybe think about also outsourcing or working with different providers? Maybe curious for 1inch, and we can then go around.
Regarding the protocols, I'm personally working on protocol side, and most of our protocols are developed internally by our team. We got some help with the, like I would say, alien technologies, like Solana stack, for example. We got external help, but at the end of the day, code was shipped by our internal team. We did not like development experience pretty much, but yeah, we have to work with it anyway. So yeah, but we have ambition to add much more chains and connect them with this Fusion Plus. I'm not sure how much we would develop on our own, how much we would borrow somewhere, because of there are like tons of open source implementations of similar things, especially after a recent hackathon, Unite DeFi. So yeah, but general answer is that most of the protocol things are developed internally in-house. And yeah, the best approach, what we use is to write as less code as possible and to have as much audits as possible.
Okay, maybe Michael, what's the approach at Doma?
Yeah, we work with Privy as one of our partners for embedded wallet infrastructure. Again, I think at the end of the day, it boils down to the ICP, the customer profiles, who you're solving for. And for many of us, it's really about resource prioritization. So we have a partner-led approach until we need to build something in-house internally. We know we're experts at policy compliance, domain operations, but everything around easy wallet onboarding, integrations, Web3 integrations, I think that's where we can tap into the ecosystem. Plenty of amazing partners that we work with on the wallet side, embedded payments, DEX integration, token discovery. We don't need to recreate that, right? Because again, our goal is to create a composable format for these assets to exist on chain. So just like you can trade meme coins, ERC20 meme coins, we think you should be able to trade fractional ownership of some real assets too.
Yeah, fully agree. Especially also on the user profile and who you want to serve. Maybe for Beefy, I'm interested in this. It sounds like you developed a lot of these things in house, right? Just also my impression, but curious on your
Yeah. So we have a mentality where we try to do the things in-house first, right? And at least we make the assessment of what we need, and we try to understand what is really the challenge, right? And when we got that, we can understand better if we really need to go out and reach out to some partner where they can provide what we need as a service. And when we do that, we also are better. We have a better understanding of what we need, and we can tell them what can be like the real challenges that we need to solve. And even after making this assessment, you can have a more fair conversation about like what's the price that you can pay for that service, right? So essentially, every time that we need to do something, we try to do it in-house first. Also, we are really proud about the quality of the developers that we have. So we try to use that resource as much as possible. And also, a lot of things in Beefy are managing funds. So we try to have a complete ownership of that. But of course, there are some parts where you need to just reach out to the experts. For example, when we deployed the Beefy app, the first company that we integrated was 1inch, which after making all of the the assessment of what we needed, we realized that it's not possible to build a swap aggregator for us. So we went to the number ones, which was 1inch.
Very cool. And then maybe for DSAP as well, curious, because from what I understand, right, a lot of DeFi protocols in the past have built all their integrations on their own. And maybe, I don't know if that's the case, but maybe your stack in the future can be used for other developers to not have to build all the integrations themselves.
Yeah, exactly. So DSAP used to be a B2C provider, but we have recently pivoted to B2B2C because it makes more sense to for protocols to integrate DSAP to give a seamless user experience for their protocols. That's first thing. But we are a tech-first company. I'm a tech founder myself, but we don't believe in reinventing the wheel. So we try to use, of course, like Beefy said, like we also do cost analysis. We are a bootstrap company. So we do cost analysis a lot. Like it makes sense for us to develop or use a third-party solution. But being an infrastructure provider, a lot of tooling has been developed in-house. And one of the main reasons for is we are currently live on like 80 plus chains. And most probably next month, we might go on 100 plus chains. So the thing is, a lot of infrastructure or third-party services are not available on these chains. And we don't want to keep on running behind them to make solutions live on particular chain. So that's one of the core reasons why we prefer to develop in-house. But having said that, we don't manage any of the liquidity ourselves. Like we are dependent on, for all our DEX aggregators, we are dependent on DEX liquidity, we are dependent on DEX aggregators. For bridges, we are dependent on other bridges itself. So we don't manage any of the liquidity ourselves. So, but being an infrastructure provider, almost all of the infrastructure is in-house.
Makes sense. Cool. Now, maybe to switch it up a little bit, you were prepared. You were asked to prepare your hot take, spicy take, maybe controversial take on DeFi or also the industry. I'm really curious. Maybe we keep it to 1 or 2 sentences, and I'll give it to Beefy to start.
Okay. Maybe I will say first that I love Ravi. It's the best wallet out there. But that said, I think that if Apple or Android start rolling out crypto wallets within their wallets, I think that will eliminate the need for like third-party applications.
Yeah, I was wondering when browsers will natively do it, right? We talk a lot to Opera, and it's their goal to release that this year. So the browser natively has a wallet built in, and then maybe also the AI browsers that are coming up might think about this. Yeah. So maybe Michael, what is your controversial take?
Yeah, in terms of DeFi, I think my hot take is I think a lot of the new perp dexes, the dexes that are launching today, are going to go through a consolidation bundling. I do think the fee model is similar to a race to the bottom, just like we saw with a lot of fintechs in the Web2 side. But I do think, with anything DeFi oriented, it's just about customer acquisition. So once you acquire the user, what new services can you provide? But I do think this core logic, tech really is being abstracted in many cases, especially in the Web2 to Web3 projects. So for us, it's about bundling and unbundling.
Yeah, or I kind of agree with that whole take.
Might be a hot take.
Yeah, Anton.
I believe that Dex's volumes would flip Texas volumes in 1 or 2 years. The flipping is coming.
That's a very cool one. And I agree. And if you look at it's like at 30-40% maybe right now. So depending on the month, right? And volatility in the market.
Dexes are just more reliable. And I think we will have deeper liquidity in Dexes than in Texas. Nowadays, when you swap on 1 inch, you're not trading on single chain. Actually, there are private market makers who work via RFQ protocols, and they are selling you something what they can buy on some other blockchains, centralized exchanges, stock exchanges, or out of their pocket. So actually, they're bridging liquidity among different entities. So trading on one chain now, you're actually trading everywhere.
Yeah, and the interesting thing about this, what I like so much about it, is that some of these market makers, they even trade for their clients, right? So it's not even their own balance sheet that they trade for, but maybe a client that really needs to sell or buy one coin. So you get really, really good execution in the end. Okay, DZAP.
Yeah. So I would say, and this is like a hot take of last few years itself. We as a Web3 community wants to make the user experience like a Web2. But I believe we are moving way and way more away from Web2 because the fragmentation is increasing in DeFi almost every day. There are different L1s and L2s getting launched every day, which is indeed increasing the fragmentation throughout DeFi. And then there are wallets, of course, you have to manage the private keys. So there are protocols, chain abstraction, account abstraction protocols working to solve this problem. But I think it will still take few years to give a seamless Web2-like experience. So I really believe we need to tackle the problem of fragmentation to give a Web2-like experience to increase the Web3 adoption.
Soon. We made a lot of progress. If we do the same progress in the next 3 years, I think we're in a good place. Cool. We're already coming up on time. So what I would like to do is maybe give each of you, because we have 2 minutes left, 30 seconds maximum to talk about something that's exciting and coming up with your project. So maybe a new tool, a new upgrade, a new integration, a new direction, short vision. 30 seconds for everyone. Michael, go.
Sure. Last week we announced Mizu. In Japanese, that's water. We are making domains liquid again. Traditionally, premium domains are illiquid assets. So in the next 30 to 60 days, we are launching the world's first liquid domains investment platform for that.
Very cool. Anton.
Yeah, we're just working on next generation of protocols. Yeah, it will be ready when it will be ready.
Also great. And DZAP.
Yeah. So we are working with a lot of ecosystems where DZAP can be integrated. And one of the advantages, their protocols can give a seamless user experience to their users. And we are working with a lot of non-EVM chains, which is kind of a uncharted territory for us. And because EVM, everything is same. And the main thing is it helps protocols as well as ecosystem to increase their TVL and adoption for the end user. Because we have the same retail and all the protocols are fighting for the same liquidity and retails everywhere.
Makes sense. And last but not least.
Cool. So I was just hearing a panel from I think it was the Linera CEO, and he was saying you need to think who is your enemy, let's say. So And I think the enemy of Beefy users is losing time, right? That's why we provide all of these services where the user just deposits once and they don't need to interact anymore, right? So we want to take this a step further, and we are working on a stablecoin vault, which is multi-strategy and multi-chain, right? So the user needs to just deposit once, and we will take care of not only choosing the chain in which these stable coins will earn yield, but also the platforms, right? So these strategies will switch automatically from Aave, from Morpho, and to like any strategy that we predefine. So that's, I think, the most exciting thing that we are working on right now.
Yeah, I like the concept of users that want to save time as being or wasting time being the enemy. Thank you so much all for joining us on the panel. If people in the audience have questions, I don't know if we can spend 1 or 2 more minutes. And otherwise, thank you so much for listening.